next week and then the last week of October, you're going to have about 80% of the companies will have reported earnings. Next week, earnings gets really, really busy. But so far, so good. After having lowered estimates coming into the quarter by about $10 a share, companies are beating estimates, and it's great. We came into earnings season a little bit under expectations in terms of Wall Street after the Liberation Day. When Trump announced those tariffs, there was a very, very sharp drop in earnings per share estimates for this quarter. Then those quickly rebounded as soon as we got some resolution on the tariffs, but they never got back to where they were, and then they drifted slightly lower since. So despite this kind of upheaval in outlooks because of what tariffs were going to do, although nothing ever became of the tariffs, it did lower earnings expectations. So again, we're having a good beat rate. By the time we get through the end of this quarter, we're probably going to have a 75 to 80% beat rate, about average, about usual. Companies will do okay. So again, I wouldn't bet a whole lot right now against earnings season here for the next couple of weeks. You could have some market volatility for sure. There's going to be certainly some companies that come in that miss expectations, but it's not going to be so much the earnings miss that's going to matter. It's going to be the outlook, and particularly when we start getting into next week. So right now we're doing banks for the most part, but next week we're going to start getting into the Mag 7, those type companies, the Netflixes of the world. And so their outlook for what it's going to look like in the fourth quarter and into next year is going to be much more important than the numbers that they just report. And again, this is particularly the case for the AI-related companies. We did see a lot of good reports coming out in the second quarter from the AI companies, lots of expectations about build out for CapEx, etc. So again, they've kind of set the bar high for themselves going into this reporting season. So these companies are going to have to really come out and say, oh, not only were we going to build this many, we're going to build this many now, whatever it is, but they've set the bar fairly high. So there is some room for some disappointment in Mag 7 just from the buildup of expectations that we've had. So just something to be aware of. While this market will likely end higher by the end of the year from where we are now, doesn't mean it's going to go there in a straight line. There's going to be some potential risk here as we get into November and into December for some potential, at least short-term drawdowns that will probably be met by the dip crowd, just as we've seen here lately. But again, expect some volatility between now and year end, particularly in the first 2 weeks of December when mutual funds do all their distributions for the year. So again, we typically get some weakness there as well, but all those will be opportunities. There's a lot of things to kind of propel markets higher. Buybacks are going to be very large here over the course of the next 2 months as we get into year end. There'll be about $7 billion a day in buybacks, just kind of pushing market prices higher across the board. Catch me daily on The Real Investment Show. The link is in the description.